Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and this time around we have a special video for you. As we close out the year, I asked experts to share their do's and don'ts for investors as we head into 2024. Let's count down the 5 points they listed. Many of the people I spoke to emphasize the importance of simply being invested in the resource space right now, especially gold and silver. Here's how veteran investor and speculator Rick Rule of Rule Investment Media explained it.
If you believe in a bull market in precious metals and commodities, if you believe in that, start by investing. Don't buy the penny dreadfuls. If you get a bull market, the best companies in the commodities will give you doubles and triples. In other words, if you believe that we have a continued bull market in oil, over the next 5 years, Exxon will give you a triple. You don't need to come into a penny dreadful. So if you're buying a bull market in commodities, you don't need to buy the juniors. Buy the juniors because you believe that there's some event internal to the company where they can add a quantum increase in value. Pay less attention to the market, pay less attention to the commodity, and pay much more attention to what that company's doing, unless you can find a commodity that is so dreadfully out of favor that it's going to come back of its own volition.
Brien Lundin of Gold Newsletter made a similar point, saying that we're staring down a generational opportunity in junior mining stocks. This is what he had to say.
So the do, I would say, is if you're not already invested in the sector, get a position, not individualized investment advice, but generally speaking, be in this sector because when it turns, it's going to turn quickly and hard. The don't is don't give up. Don't give up on it. We're in that part of the year where you can take some tax losses, et cetera. You need to do your individual portfolio management. But when it turns, and I think it is imminent, and I do think it's a generational opportunity, when it turns, it's going to turn very rapidly. So do be involved. Don't be completely out of the sector.
Gwen Preston of Resource Maven also commented on how crucial it is to have exposure to gold right now. But she said she's exercising caution when it comes to base metals. And in the energy sector, she sees a lot more room for uranium to move.
In the next 6 months, I do think that will change. So I would encourage exposure to gold. I would say don't right now get overly excited about the base metal opportunity. This will happen. The supply deficits for copper, for nickel, these things are very real, but they are not going to become investment opportunities until the investing community is confident that we're moving towards a growth path. Right now, instead, the questions are what are the risks? Are we heading to a recession? Right? So we're not going to see that as an investment opportunity until we're on a growth path. So be ready. Certainly figure out which stocks you like, but I wouldn't get overly excited about the base metal opportunity in the near term. So consider your gold, get exposed to gold, don't get excited about base metals, and know that there's a lot more room in this uranium market. Yes, the price has already gone up 50% since the midsummer. Yes, there's a lot more room left in this uranium market.
In terms of how to identify companies with potential, Jeff Clark of thegoldadvisor.com said he's looking for stocks with the 2 C's, cash and catalyst. He also described a strategy he uses to weed out stocks in his portfolio that he may need to sell.
Yeah, I think you need to look at companies that have the 2 C's. That's what I'm doing. I have a thing on the site that the 3 legs of the stool that you need to look at to evaluate companies. I think the opportunity is tremendous right now. I don't know that the bottom is in for the mining stocks, but when sediment turns, you're gonna see doubles and triples like really quick, and they'll still be undervalued. So clean up your portfolio, get rid of the ones that you think just aren't going to do it. A fun exercise is, what if I told you had to cut your portfolio in half? All the mining stocks you own, you have to cut it in half. Now, I'm not saying you have to do that, but I'm saying going through that exercise really helps you crystallize who are the best in my portfolio, the most likely to participate in the next uptrend.
Finally, silver guru David Morgan of the Morgan Report said that while precious metals are a key portfolio component, investors should remember to stay balanced.
Well, I would say I've written about it in the past. It's called the 10 Rules of Silver Investing. It applies to gold. It really applies to almost any, really. And that is, keep it simple, keep it sincere. You don't have to overload in the precious metals to be well protected. 10%, probably more than enough for almost everything. There are other opportunities, and look to, solve the problem, And if you agree with me that energy, to do your own homework, find somebody that's very studied in it and you can learn. So, part of the solution is if I invest with this XYZ, solar company or this SMR company or this hydrogen experimental company or whatever, I'm helping myself because I'm going to plan to make money on it. And I'm also helping society at large because this new hydrogen-based fuel cell is going to be so much better for the environment and for mitigating the energy crunch that's up ahead, I believe, David.
You can find the links to the full interviews with Rick Rule, Brien Lundin, Gwen Preston, Jeff Clark, and David Morgan in the video description if you'd like to hear more. That's all for this week. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.